Good morning. Welcome to the Joy Business Report, live on Joy 99.7 FM. Hello to you if you're listening from KTU Radio in Koforidua. Coming up, Bank of Ghana records almost 61 billion cedi loss in 2022 due to the domestic debt exchange program. Meanwhile, 92% of banks without government control or ownership concede losses from the domestic debt exchange program, where their biggest pain as they expect a challenging macroeconomic outlook. We hear from the 2023 Ghana Banking Survey by auditing firm PwC. Plus, Finance Minister Ken Ofori-Atta to present the mid-year budget review today, but there are strong indications of no new taxes, whilst end-of-year expenditure target might not be changed. Details coming up. My name is Darryl Kwao. Also later in the bulletin, the government records marginal oversubscription of treasury bills as interest rates rise again to 30.3%. First, though, the Bank of Ghana recorded a huge loss in its operations last year. Its financial statements put the loss at almost 61 billion cedis. The central bank attributed the loss to the impact of the domestic debt exchange program and impairment of some assets of the group. However, a careful look at the consolidated account raises questions about its rise in expenses in 2022. For instance, maintenance of motor vehicles shot up by more than 100% to 131.5 million cedis. Meanwhile, the governor of the Bank of Ghana, Dr. Ernest Addison, had earlier told the Public Accounts Committee the central bank would take some aggressive measures to turn around its operations as well as embark on some expenditure cuts.
We already have a medium-term plan to become more efficient, including cutting down on all expenditures, not only capital, because we are going to be starting off from, a very large loss. And in the discussions that we have had with the fund, we are hoping that over a 3-year period, we should be able to correct the loss situation into a profit situation.
And that was Governor of the Bank of Ghana, Dr. Ernest Addison. The 2023 Ghana Banking Survey by auditing firm PwC has revealed that 92% of banks without government control or ownership considered that losses from the domestic debt exchange program were their biggest pain. In comparison, 75% of the government-owned or government-controlled banks share this view. Here's more in this report.
According to the survey, the banks were unprepared or ill-prepared for the DDEP. They seem to have missed critical signs that should have given them a hint that their investment in government securities were at risk. 100% of local banks, 83% of regional banks, and 67% of international banks that participated in the online survey flagged profitability as their major concern post the implementation of the domestic debt exchange program. For liquidity concerns, regional banks were the most concerned, followed by local banks. With regard to capital adequacy and solvency concerns, local banks were the most anxious, followed by regional banks. Furthermore, the banks acknowledged that the road back to profitability won't be smooth sailing. The bank executives were therefore unanimous in their expectation of a challenging macroeconomic outlook over the near to medium term, but remain confident for quick comeback.
And that was a Business Desk report. The impact of the domestic debt exchange program on banks will compel the financial intermediaries to introduce new products and services. That's according to the country director of Ghana International Bank, Bafohin Abankwa. These products and services, he says, may inure to the benefit of the economy and further strengthen the financial sector. Speaking to Joy Business, he expressed confidence that experiences from the domestic debt exchange program will make Ghanaian banks stronger and better.
There are lessons that all stakeholders have learned, and we would expect that those would begin to feature in how banks implement strategy and how they manage their balance sheets and what banks invest in going forward. What it will also bring out is the tenacity of the banks. When you think you've run out of options, you go back to the drawing table, you think. So yes, we've seen the impact, but I think that there are going to be things that will come out of this, and products and services that we probably do not see today will come into effect as we are forced to become more creative.
Bafohin Abankwa is country director of Ghana International Bank. Now, there are strong indications that Finance Minister Ken Ofori-Atta will not propose new taxes when he presents the mid-year budget review today. This is what Joy Business has picked up from persons with knowledge of the budget. Here's George Jaffe with more.
Government sources insist introducing new taxes is not the way to go, arguing that there is tax fatigue and businesses are under a lot of pressure. Government to rather focus on existing measures and see how they can be more efficient in getting the required revenue for the state. On the expenditure levels, we understand that there wouldn't be significant changes in terms of what was originally projected for the end of 2023 as captured in the budget. The finance minister will be heavy on the IMF program and progress made to get the country ready for its first review in September this year. We also understand that there wouldn't be any supplementary budget. Government sources have maintained that this will be a normal presentation, downplaying any significant change in terms of the cost for the economy. The finance minister will give some numbers to support government's claims that the economy is showing signs of stability. In terms of focus, the mid-year budget review will look at how to restore macroeconomic stability and accelerate economic transformation.
George Rafael with that report. Meanwhile, economist Dr. Ishmael Yamson says the finance minister should use this presentation to restore confidence and bring everyone on board to help stabilize the economy. And while government has been advised to ensure that the mid-year budget revives confidence amongst the private sector to attract more foreign direct investors, this, according to some financial analysts, will help complement the economic recovery steps undertaken by the government. Speaking to Joy Business, economist Professor Lord Mensah said it is time to use the budget to give hope to businesses operating in the country.
I think it has to do with communication as well. And if the communications are not clear, that is when the investor community seem to lose trust in the government. And when they lose trust, whatever is put on the table, they'll take it with a pinch of salt.
Meanwhile, the Chamber of Independent Power Producers wants the finance minister to announce drastic measures that will reduce government indebtedness to its members. Here's CEO Eliklim Kwabla Akpetogbo.
We have been staffed needlessly for almost 7 months into the year. If not for the good faith that we have towards our clients or contracts, you can imagine what the outcome will be. For the 7 months in succession, we've been paid averagely about 12% of our monthly invoices. And by our estimation, by close of business today, we expect our arrears to scale up to about $2.3 billion.
That was Eliklim Kwabla Akpetogbo, who is CEO of the Chamber of Independent Power Producers. Now, government recorded a marginal oversubscription of treasury bills as interest rates continued its upward trend. According to the auction results by the Bank of Ghana, government got about 2.34 billion cedis. Here's more in this report.
The target for this auction was a little above 2.28 billion cedis. About 1.493 billion cedis were bids tendered for the 91-day bill. All the bids were subsequently accepted. Also, the bids for the 182-day T-bills were estimated at about 503.58 million cedis. Similarly, all the bids were accepted. For the 364-day bill, about 345.14 million cedis were gotten from the auction. Meanwhile, interest rates on the 364-day bill went up by 0.26% to 30.30%. The yield on the 91-day bill also went up to 25.24% from the previous 24.92%. That of the 364-day bill, however, stood at 27.14%, higher than the earlier 26.80%.
Well, some more news for you this morning. Fuel prices are expected to go up beginning tomorrow, the 1st of August. That's according to the Chamber of Petroleum Consumers, COPEC. It says the prices of petrol and diesel are likely to increase averagely by about 9% over the current mean price of 11 cedis 90 pesos per litre, whilst the price of liquefied petroleum gas, LPG, will go up by about 20%. COPEC said the expected increment of prices of petroleum products will be due to the rise in prices of finished products on the world market, though the cedi improved in performance against the US dollar during the period. Here's Executive Secretary Duncan Amwa.
Indications are that pump prices are likely to go